All right, it's showtime. Hey, everybody, I'm back again today. Thanks for joining me. Uh, Today, we're going to talk about how a small business can benefit from an actual 2021 credit review, right? And how you're going to be able to do that, how you're going to be able to review it. We're going to dive deep into the credit reports for business credit so you understand exactly what you've been accomplishing over the past 12 months. All right. So I've got my trusty dog sitting beside me. It's 75 degrees and sunny here in Florida. Don't be jealous. So let's dive in. My name is Steve Weibel. I'm here with Credit Suite. I'm not the director of business development. They haven't changed this slide yet. I'm just a key account manager. And by the way, go to creditsuite.com/EIN. Learn how to get business credit that's tied to your end, not to you personally. And don't forget, my crack team social media managers are here to answer any and all questions. Just put your answers in the chat box and look below. Give us a little bit of a like, right? Tell everybody you love us. Tell everybody you love the content we're putting out here. We just want to share this with the entire world. We want to help every business owner manifest their goal. I was looking for the right word there. All right, so let's dive in. We've got, by the way, you need to strap in. This is going to be a bit of a long one. I know I talk fast, so they tend to be short, but this one's going to be tough to make any shorter than at least an hour. All right, I hope you enjoy. All right, so first things, why should you do one? All year we've been talking about business credit. I mean, that's literally what we talk about every year, right? You reach out to Credit Suite, this is our thing, right? We're like business credit gurus and lunatics. And within the year, we've talked about business credit reporting agencies, right? And the reports. I'm going to open this up because my eyes, like I said yesterday, are not as good as they used to be. All right. So, do you really know how to read your business credit reports? And do you know what to do with the information that you might find on those business credit reports? If you're not sure, by the way, call for a free business credit consultation. Reach out to us at 877-600-2487. I have a crack team of social media people here to help you, but I also have a crack team of advisors, reps that are here to give you guidance on what the next step is to build your business credit. So, as you're seeing this presentation today and you're thinking, man, I've checked all this stuff and there's really nothing there, that's a negative, right? So we want to show you how to make that a positive, right? Turn it into a positive. All right. And then do you know what to do with the information you might see on your credit reports, right? Knowing what's in your business credit reports can only help you. I can tell you it can only be a positive by knowing what's there. Learning what the credit reporting agencies are scoring you on will help focus your efforts on building business credit. For example, if on-time payments matter to a credit reporting agency more than utilization percentage, spoiler alert, they do. Uh, then wouldn't it be a good idea to concentrate on paying your bills on time? Of course it would be. And by the way, you can get your free business credit reports at creditsuite.com/monitoring. I'm going to throw that in the chat box. Creditsuite.com/monitoring. We're talking about monitoring your business credit today. It's a good idea to check it out. We're going to dive deep, deep, deep into the credit reporting agencies and the real detailed reports. But if that's not something you're ready to pay for today, go ahead and take a look at a little bit of a wider report. Not as deep, it's more wide. Go to creditsuite.com/monitoring. All right. So business credit is an actual asset and it is worth money, right? Most people don't understand this. It actually is an asset. That means you can actually factor business credit into the cost of your business should you ever decide to sell it, right? So I always give this example. You get two barbershops in the same town in the same size building. Everything's identical, same clientele, same volume. Everything's the same profit level. Only difference is one has $300,000 in business credit available to it, one has none. Which one do you think is worth more? I know which one I'd pay more for, right? They've already built their profile. That's going to transfer with the business if you ever decide to sell it. All right. Plus, what you do to build business credit will often help you build your clientele as well. Trust me, that's a big deal. In the printing world, I needed to have a really strong business credit profile in order to get the larger accounts, right? I gave an example where the government wouldn't give me larger contracts because my business credit profile wasn't quite strong enough with Dun Bradstreet. So I had to build that profile up to get larger contracts. So it really has a huge impact on your business. Don't forget that. Always keep that in the back of your mind. It's huge. By the way, grab your free business credit building guide at creditsuite.com/live dash checklist. And we'll give you a guide on what you should start doing right now. All right. So what are the benefits of having a good credit score for a small business owner? Better business credit scores will help you get business financing, obviously, and they will help you get better financing with lower interest rates and lower payback terms. For some entrepreneurs, better business credit scores are the difference between getting financing or getting none, right? So they have a huge impact. There are a lot of other things that business credit actually impacts. I told you there's value, there's insurance rates for your business insurance. opportunities to do business with certain entities and agencies. A business credit profile is way more powerful than people realize. A lot of people approach business credit like, I just want to get a vehicle without personal guarantees. Well, that's a short-sighted approach. You should have a much larger view of what business credit is. It will change your life. Just ask Sam Walton, right? His entire business was built on business credit. All right. So what information should be included in your review? You want to be looking at your actual full business credit reports, not just the scores. I hear this all the time. Oh, I'm an 80 PAYDEX score. Well, that's a really small picture. It's time to look at the details. These should be reports from Dun & Bradstreet. They should be reports from Experian and Equifax. All right. So there's a couple of frequently asked questions about the process. Get your D&B credit report by signing into the D&B website. You want their credit monitor product, which shows the most scores. Get your Experian credit report by running a search for your business at Experian's website. You want their credit score report. And to get your Equifax business credit report, you're actually going to need to contact them. Specify that you only want a single Equifax business credit report. Okay, you can Google all this up. It's pretty easy. I think D&B is actually dnb.com. David Nancy Boy, dnb.com. All right. So how to get started with the 2021 credit review now before it's too late. If a highly detailed report isn't in the budget right now, and at least a shorter summary report will keep you informed and in the habit of checking your credit reports, today we're actually going to look at the high level information. Again, if you're not in a position to get the highly detailed reports because they're not inexpensive, just go to creditsuite.com/monitor and get your free business credit report, which will be a summary report. It'll keep you informed, get you in the habit of checking your credit reports. So that's something you continue to do when you move forward. Today, though, we're going to look at the high level information. This is what you absolutely need to know. All right. Look, it always makes sense to start with Dun & Bradstreet, right? They're the biggest business credit reporting agency in the world. It's not even close. All right. You need a DUNS number to start building business credit. If you don't know how to get your DUNS number, reach out to us. You call us 877-600-2487. We'll show you exactly how to get your DUNS number. As a matter of fact, I'll tell you right now. Go to dnb.com. And you on the right-hand side, on the upper right-hand side, it says DUNS number lookup. You can look up your company, see if, just look it up, pick the state, pick the name of your company, hit a search. Now, make sure when you put that name in, put exactly what is registered at the Secretary of State. And if nothing comes up, there'll be a button that says request new DUNS number. Real simple. If it does come up, request copy of DUNS numbers right there as well, okay? By the way, if you don't have a DUNS number, you need to get it, and it's free. By the way, it's free. Don't let them sell you anything else. You don't need it. It's free, okay? They're required to give you that number. The number gets your business into their system, all right? But your business will not get a PAYDEX score until there's at least 3 trade lines reporting and you have a DUNS number, okay? Your business must have both to get a D&B score and or report, all right? D&B offers database-generated reports. These help their clients decide whether your business is a good credit risk. Companies use reports to make informed business credit decisions. I can tell you, when I was giving terms to my clients, I always pulled their D&B report. And back when it wasn't easy to do, you had to call, order, and have them fax it to you. And that was how I knew if my clients paid their debts, right? I didn't want to give them net 30, net 60, net 90 terms on a $100,000 project if they had a history of paying 90 days late, 120 days late. If I was willing to do business with them, I might say, okay, they pay on average 90 days late after terms. They want 30-day terms. That's 120 days. I need to build that into my price so that I'm compensated for that, right? So most businesses who do business with other businesses will pull the D&B report. We call it vendor reports, right? And the reason we do it is we want to avoid that bad debt. So several factors go into creating such a report. In general, when D&B does not have all the information they need, they will indicate as much in the reports. But missing information does not necessarily mean your company is a poor credit risk. Instead, the risk is pretty much unknown, right? So look, D&B's database contains over 350 million companies around the world. It includes millions of active firms and over 100 million companies which are out of business, right? But these are kept for a reason. They're kept for historical purposes. They can track industries, what happens in particular industries. There's, I don't want to go too deep into that rabbit hole, but there's a reason they keep over 100 million companies in their database that are out of business. And they list over a billion with a B, trade experiences. It works to improve its analysis to ensure the greatest degree of accuracy as possible, all right? To ensure as accurate report as possible, give D&B your company's current financial statements. This is something very few people do, and it's really important. If you have a solid financial statements, give D&B a copy. It actually will help you build business credit. It'll actually help alleviate the quote unquote risk in your vendors' minds about your company, right? They actually use predictive models and scoring. D&B takes historical information and try to predict future outcomes. This is to identify the risks inherent in a future decision. They take objective and statistically derived data rather than subjective intuitive judgments, right? There are sample reports online available at the D&B website, all right? So first, they're going to give you is an executive summary. The report starts with basic company information such as number of employees, years that the business was started, the net worth of the company, what its total sales are. All right, this is what they call the executive summary. Number of employees, year your business started, the net worth, and the total sales of the company. Now, I've pulled companies and seen numbers that seem really out of whack. It's because they hadn't updated D&B in 5 years. Company was doing 20 million, it was showing them doing 1.2 million. So it's important to keep that updated as well. You might want to make that as part of your checklist. All right. The rating helps companies quickly check your business's size and composite credit appraisal. Dun Bradstreet bases this rating on information in your company's interim or fiscal balance sheet, plus the overall evaluation of your business's creditworthiness, right? The scale goes from 5A to 8H. I'm not going to dive too deep into that. The rating classifications show your company size based on worth or equity. All right. D&B assigns such a rating only if your company has supplied a current financial statement. So again, we're back to the current financial statement. If you have the ability, if your company looks financially strong, let the world know about it, right? Make sure you get that information to D&B. It's really, really important. It can be a game changer, and it can really impact the limits that you get when you're applying for business credit, right? So if you're a $100,000 company applying for a vehicle, you'll probably get it. But if you're a $5 million company and you're looking to get a couple of vehicles, it's going to be a lot easier road if they know that you're doing $5 million. Not only are you providing that information to creditor, but also D&B is confirming it, okay? So don't forget, get a current financial statement to D&B if you have that ability. All right. The rating also contains a financial strength indicators, is calculated by using the net worth or issued capital of your company. Plus, there's a composition credit appraisal. The number runs 1 through 4 and reflects D&B's overall rating of your business's credit worthiness. Okay, this is not the PAYDEX score. Okay, it's a financial strength indicator. Here's what the scores mean. 1 equals high, 2 is good, 3 fair, 4 is limited. So it's not a negative. And how it can look based on the previous numbers we talked about, they might give you a 3A4 rating. Okay, so 3A size, 4 limited. All right. So like I said, we're really diving deep today. All right. This part shows, oh, the D&B PAYDEX. This is what everybody knows about. All right. So the PAYDEX is basically, it shows 2 gauges. It shows up to a 24-month PAYDEX and an up to 3-month PAYDEX. As a result, you can actually see recent history of your company's performance over time and your company's performance over time. So we're looking at what has the company done in the last 24 months and what's it done in the last 3 months. That's a clue. So you know if someone who's paid really well in the past, suddenly their sales drop, let's say, and they're paying their bills much slower, you can see that in the 3-month PAYDEX. It gives you a little bit of pause to know whether or not you should do business with that particular company, or at least you can then question them a little more, right? Both gauges have the same exact scores. One means greater than 120 days slow when it comes to your business paying bills, right? A 1. 50 means 30 days slow. 80 means prompt payments, all right? 100 means anticipates. In other words, you pay your bills, you take the discount. 100 is by far the best PAYDEX score you can get. I rarely see 100. Typically what we'll see is 90, which means you're taking the discount. So if a company offers you net 30, 2% net 10, net 30, that means you have 30 days to pay it, but they'll give you a 2% discount if you pay it in 10 days. Typically, they'll report that as a discounted payment, right? And you'll come in anywhere between 90 and 100, depending, all right? The PAYDEX score is Dun Bradstreet's dollar-weighted numerical rating of how your company has paid the bills over the past 12 months. It reflects how well your company pays its bills. Again, we talked about that in the beginning, right? That's the heaviest weight there is. How do you pay your bills? If you're unsure of this, call for your free business credit consultation, 877-600-2487. One of the guys and girls on my team would love to help you, love to give you a little guidance, all right? So what is predictive analysis? The next section shows likelihood of business failure. It also shows how often your business is late in paying its financial obligations. Again, we're still on D&B, right? These are comparative analysis, the financial stress class and the credit score class, all right? First, we're going to do is talk about the financial stress score. All right. This shows your financial stress class and a financial stress score percentile. The financial stress class runs from 1 to 5, with 5 obviously being the worst. And the financial stress score percentile, it's a comparison of your business to other businesses. The percentile contains a financial stress national percentile. The financial stress national percentile reflects the relative ranking of your company among all scoreable companies in D&B's file. It also contains a financial stress score. The report indicates the probability of failure with a particular score. So what they're basically giving their customers is, hey, here's a company, here's how they compare to other companies in our database, and here's the probability of failure with that particular score. So there's a lot of words there, but that's basically what it sums up to. All right. They're predicting whether or not you're going to fail in the next 12 months. There you go. I didn't even know that was coming. Scores designed to predict how likely it is your business will fail over the next 12 months. The average probability of failure is based on businesses in D&B's database, not businesses in your neighborhood, in their entire database. It is provided for comparative purposes only. The financial stress national percentile reflects the relative ranking of your company's company among all scoreable companies in D&B's file. This score offers a more precise measure of level of risk than the financial stress class and percentile. It's meant for customers using a scorecard approach to determine overall business performance. Okay, so let's talk about the credit score class. Excuse me. The credit score class measures how often your company is delinquent in paying bills. Overall numbers range from 1 to 5. 1 is businesses least likely to be late. 5 obviously is most likely to be making late payments. Okay. More granular scores run from like 101 to 670. What does that mean? Oh, 670 is a high risk. Okay. So it's not just a 1. Obviously, it's 101 to 670. All right. So the credit limit recommendation, which I love, it shows a spectrum of risk. Your risk category could be low, moderate, or high, right? Risk is assessed using D&B scoring methodology and is one factor used to create recommended limits, right? We always talk about that. The one thing I love about business credit reports is they actually recommend you for a credit limit amount, right? Which means you can scale up very, very quickly. It looks like I'm running ahead of schedule here by about 10 minutes. Sorry if I'm going way too fast. Let me know in the chat box. Hey, Steve, slow your roll. It's the end of the year. All right. Anyway, free business credit consultation, 877-600-2487. By the way, we're still at D&B. We got a long way to go. So let's talk about D&B's viability rating, right? This section contains the viability score to show, once again, risk, portfolio comparison as a demonstration of risk, data depth indicator, descriptive versus predictive, company profile. This shows if financial data and other info was available. You guys ever notice these PowerPoints have lots of long words, right? And I like to talk fast. All right. So in the credit capacity summary, this part of the report says it repeats the D&B rating above. It includes financial strength, the composite credit appraisal, and payment activity. So in other words, this is basically the summary of everything we've just looked at. You can quickly glance at it and understand where a company stands from a financial strength point of view, the composite credit appraisal, and the most recent payment activity. All right. They're going to give the business history and business registration. So it's going to contain information on ownership. It also shows where your corporation is filed, i.e. which state. This includes the type of corporations and the incorporation date. Now, they're going to grab that information from the Secretary of State. What you don't want to do, and I've heard this a million times in my conversation, is, hey, how long have you been in business? Well, I've been in business 10 years. Great. When did you register your business? Yesterday. Then you've been in business since yesterday. Okay. You don't want to, especially with filling out a credit application, I know what you're trying to do. You're trying to look like you've got experience in the industry, right? Which most people who go into a business already have experience in the industry. So we instinctively know that. You don't want to lie about your incorporation date, even inadvertently. Whatever's showing up, and this is why we talk about consistency everywhere, right? You want to see what's out there on D&B, see what's out there on Experian, see what's out there at Secretary of State, and actually Google, see what's out there as well, okay? In addition, they're going to give you a government activity summary and operations data. This section gives basic information on whether your company works as a contractor for the government. Also shows the kind of industry your company is in, and it shows what facilities are like, including general data on its location. All right. So there's a lot of information on the detailed D&B report. It shows your industry data and family tree. In other words, if you have branches or subsidiaries, when I had my company, I had an office in New York and in New Jersey, so it would show both locations. Okay. In addition to that, the list is limited to the first 25 branches, subsidiaries, divisions, and affiliates, both domestic and international. D&B does offer a global family linkage link to view the full listing. So if you're doing business with a company that maybe has 50 branches and you want to get more information, you can ask for the global family linkage link, okay? Then you're into the financial statements. This section is devoted to financial statements D&B has on your business. It shows assets and liabilities with specifics like equipment and even common stock offerings, right? So if you have a C corporation, you have stock out there, that's going to show in there as well, all right? They're going to have an indicators of full filings. It's going to show all public records like judgments, liens, lawsuits, any UCC filings. It also breaks down where filings are venued, like the court or the county recorder of deeds office, all right? It shows if judgments were satisfied, paid. It also shows which equipment is subject to UCC filing. So if you have equipment, let's say a printing press, I always lean back on my industry, and I have financing on it, and Mitsubishi financed it, and they filed a UCC filings letting everybody know, don't let this guy borrow money against this equipment because we already have a lien on it. Makes sense, right? Right? It's like getting two mortgages. You can't do that on the same house, excuse me. Well, actually you can, but you know what I mean. So this part, so the commercial credit score, this part shows the credit score class again. It also shows a comparison of the incidence of delinquent payments. It also includes key factors to help anyone reading the report interpret these findings. It explains what the numbers actually mean. It goes into the credit score percentile norms comparison. Here your company's compared to others based on your region, your industry, your number of employees, and time of business. All right, so this is different than originally we talked about where it's all businesses. The credit score percentile norms comparison is all about your region, your industry, number of employees, and time of business. So basically they're comparing you to your competition. That makes sense, right? So if your competition's a 60 PAYDEX score and you're an 80, you're looking really good compared to your competition. All right, which really works when you're trying to get business from a customer who's comparing you and your competition. I'll tell you, this is something that people don't think about. Customers check D&B reports. Yeah, I know if you're a barber, the odds are I'm not pulling your D&B report to see if I want to get a haircut from you. But if you're in the commercial business, you're selling to other businesses and much bigger businesses, don't be surprised if purchasing agents aren't pulling your D&B report. All right. Then we're going to move on to the financial stress score and financial stress percentile. This is section that shows financial stress class and a financial stress score percentile. The stress class runs from 1 to 5, with 5 being the worst. The stress score norms calculate an average score or percentile for similar firms. Norms benchmark where your business stands. This is in relation to its closest business peers. Again, comparing you to your competitors. Excuse me. Financial stress score percentile. This is a comparison of your business to other businesses. The percentile contains a financial stress national percentile. The national percentile reflects relative ranking of your company among all scoreable companies in D&B's file. It also contains a financial stress score. So they're throwing a ton of scores out here, right? The report indicates the probability of failure with a particular score. I feel like I'm going over some of these twice. I don't know. The financial stress score percentile comparison. This score is designed to predict how likely it is your business will fail over the next 12 months. The financial stress class shows where your company shares some of the same business and financial characteristics of other companies with these classifications, but it does not mean your business will necessarily experience financial stress. Okay. The probability of failure shows the percentage of firms in a given percentile that discontinue operations with loss to creditors. So basically, they're showing people in your industry what are the odds of them failing and experiencing a loss to creditors. Okay. Financial stress, and there's additional. The average probability of failure is based on businesses in D&B's database is provided for comparative purposes only. The financial stress national percentile reflects the relative ranking of your company among all scoreable companies in D&B's file. The financial stress score offers a more precise measure of the level of risk than the financial stress class and percentile. It is meant for customers using a scorecard to approach to determine the overall business performance. All right. That's D&B. Now we're going to talk about the advanced PAYDEX and CLR. This section repeats the 24-month and 3-month PAYDEX gauges. It also includes a repeat of the credit limit recommendation. So twice they're talking about it. There's also a PAYDEX yearly trend. It shows the PAYDEX scores of your business compared to the primary industry from each of the last 4 quarters. Okay. What is a yearly trend? The yearly trend is like a graph. All right. It includes detailed payment history with payment habits and a payment summary. It helps show whether your business pays the bigger bills first or last. Let's look at Experian. Man, D&B was a lot, right? Everybody take a breath. There's a lot of information. We're not even quite halfway through, a little under halfway through. The rest will be a little bit easier, but D&B, like we talked about, is the largest by far. They give the most information because most vendors or creditors, excuse me, lean on D&B, especially when we're talking about business to business. Once again, using the printing industry, dealing with paper suppliers, dealing with printing equipment, things along that nature, ink, customers, they're all going to look at a picture of what your company looks like so they can make an intelligent decision on whether or not to do business with you, either from a customer point of view or a vendor point of view. That's why there's so much information, because if they decide to do business with you and you don't pay the bill, and D&B basically said you were probably not going to pay the bill, they've made a poor decision, haven't they? Right? All right, let's move on to Experian. Hope the words are way smaller in this one. So Experian offers data and analytics to businesses to help them better assess risk. They possess a massive consumer and commercial database that they use to gauge risk. They have found that blended data and reports work a lot better for them. For troubled businesses, blended scores dropped an average of 30% over the 4 quarters leading up to a bad event, right? But the owner's consumer scores showed no statistically significant decline during the same period. So think about that. So a business owner's credit score stayed really high as their business was going down. So what that basically said is, instead of paying vendors, they were paying their consumer debt to keep their personal credit score high as their business was going under, basically, right? Uh, Actually, the exact opposite should happen. I'm not saying that you want to risk your personal credit for your business, but if it's something as little as that, you want to make sure that business stays afloat. I had a partner who used to say the same thing all the time. You got to keep the mother cat fat, otherwise the babies don't eat, right? So you got to keep that business going, right? The best known and most widely used score is the Intelliscore Plus. We talk about this all the time. It is a percentile score. A typical Experian business credit average report. Experian provides a sample report where you get an idea of what to expect, because Experian changes its reports at times. The best, most accurate, and up-to-date source for this information is obviously Experian's website. All right, you can find it online at, it didn't say where, I believe it's Experian.com. I apologize for that. I hope my crack team of social media has that link they can put in there. I don't know how it was missing from the slide. All right, so first thing they're going to do is they're going to give you a business background information. Basic details like the business name, the address, the main phone number, the BIN, Experience BIN number. Their BIN is like a Dun Bradstreet or a Dun's number, and that it's a unique identifier for each business in the database. It's going to give your annual sales, the business type is a corporation, LLC, etc., the date the Experian file was established, the number of years in business, and the total number of employees. It's also going to give the incorporation date and state. All right, and it will give you the length on time on Experian's file. Uh, the, the Experian Business Credit Score. Business credit score range from 1 to 100. Higher scores indicate lower risk. The score predicts the likelihood of a serious credit delinquencies in the next 12 months. This score uses trade line and collections information, public filings, as well as other variables to predict future risk. Key score factors: number of commercial accounts with terms other than net to 1 to 30 days, number of commercial accounts that are not current, number of commercial accounts with high utilization, length of time on Experian's file. I want to stop here for a minute, because we talk about this all the time about utilization not really impacting your business credit profile. It does at a much, much, much lower level than your consumer does. As a matter of fact, and I apologize, I don't have the numbers right in front of me. I believe your consumer credit profile, 35% of your score is based on your utilization rate, and I believe in Experian it's like 5 to 7% of your Experian score, I believe. Maybe my social media team can look that up and throw that in there for you, but it's not as bad as you would think. See, we're all trained as consumers, so we know 35% of my score is my utilization. In business credit, it does have impact with Experian, but it's not a monster impact like your personal. Okay, just wanted to get that out there. So Experian Financial Stability Risk Rating. Financial Stability Risk Ratings range from 1 to 5. Again, lower ratings indicate lower risk. A financial stability risk rating of 1 indicates a 0.55% potential risk of severe financial distress in the next 12 months. So in other words, what they're saying is, if you have a financial stability risk rating of 1, you've got less than 1% chance of being in financial distress in the next 12 months, right? So they're basically saying to your creditors, hey, don't sweat it. Give them the credit. They're fine. They look really strong to us. Experian categorizes all businesses to fit within one of the 5 risk segments. The rating predicts the likelihood of payment default and or bankruptcy in the next 12 months. And this is the problem with having nothing reporting, because they actually will give you a high risk score because they have nothing to look at, right? Since there's nothing there, they have to assume the worst case scenario. You're not doing business with any vendors. You're not doing business with any creditors. And therefore, you're probably not doing business. So therefore, you would be a 5 risk. You'll be really high risk. The likelihood of payment default and or bankruptcy in the next 12 months will be pretty severe in your case if you're not building your Experian file. I touch base on this because I hear from people all the time talking about D&B, 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 which is great. You want to get that D&B profile, but don't ignore Experian. Don't ignore Equifax. You've got to know who reports there. You've got to know exactly who's going to approve you at the right time and report there to build that stability risk rating up from a 5 to a 1. Okay? All right, good. Sorry, sales pitch over. So the Experian Financial Stability Risk Rating. This rating uses trade line and collections information, public filings, other variables. I think we just said this. Oh, no, this is a little bit different. This is the financial stability risk rating. Number of active commercial accounts, risk associated with business type, risk associated with the company's industry sector. This is where picking the right SIC code is important, right? Employee size of business. Okay, so in other words, how many employees you have. They're going to give you a credit summary. The section contains several accounts of various data points. For the most part, details are available further in the report. The information outline contains current days beyond terms, DBT, predicted DBT for a particular date, average industry days beyond terms, and a payment trend indicator, whether you're stable or not. All right. In addition, it's going to give you the number of payment trade lines, the number of lender consortium experiences, in other words, payment experiences, number of business inquiries, again, small impact, number of UCC filings, bankruptcies, and liens. They're also going to show in the last part, number of judgments filed, number of accounts in collection, the company background, which is going to include information on founding date, where your company's headquarters are. It does a basic background of what your business does, right? So again, it's important to choose your code wisely, right? They're going to give you a payment trend summary. This section shows your company versus your industry on monthly payment trends, quarterly payment trends. These are the percentages of on-time payments by month and quarter, respectively, okay? So they're going to give a trend summary on your company versus your industry, all right? The trade payment information, the next part is going to show details on payment experiences, financial trades. There is also data on lender consortium experiences, financial exchange trades, trade line experiences, continuous trades, in other words, you continue to buy from them, age trades, and payment trend detail. There's also a link to send any missing payment experiences. All right. Let's talk about the inquiries, the collection filings and collection summary. The inquiries part contains the industry making the inquiry and a total made during a given month. All right. The collection filing section has the date, name of the agency, and the status, whether it's open or closed. If a collection is closed, the collection filing section also contains the closed date. All right. The collection summary shows status, number of collections, dollar amount dispute, and the amount collected, even if it's 0. I get asked this question a lot. Hey, I've got some negative business credit. What should I do with it? Should I scrap my company? Well, no, that's foolish, right? Make a deal with your vendors, get that thing paid. Sometimes you can pay it over time, get it paid so at least it shows that your balance is 0, right? That will help you. Scrapping a company over a couple of negatives in your business credit report is foolish. I would never do that. All right, especially if you've got a successful business that's just run through a hard time. And let's be honest, in the last 18 months, a lot of businesses have run through a hard time, right? If you've kept your head afloat and you stayed open, you got a couple of negatives, you can deal with it. Just work it out with your creditor. All right, commercial banking, that's also part of this. For leasing, this section shows leasing institution name and address, product type and lease date, lease start date and term, the original and the remaining balance, right? So they're going to show like my lien on my printing press, right? The scheduled amount due, the number of payments per year. Let me go back. I apologize. I clicked that too quickly. And the number of payments which are current, late, and or overdue. Okay. This is in the commercial banking, insurance, and leasing section. All right. What you'll see mostly here will be leasing and or credit lines. All right. If they report. The next section is going to be your judgment filings. We're hoping there's nothing in here. But this section shows the date and the plaintiff, the filing location, the legal type and action, the document number, the liability amount. It also includes cases where your company in the report is the plaintiff or the defendant. So if you sue somebody and you get a judgment, that's going to show under your judgment filings, but it's going to show that you were the plaintiff, not the defendant. All right. Remember, it's going to show the amount, the liability amount as well. In addition, it's going to show tax lien filings. This part has the date and the owner, the filing location, the legal type, and action, document number, liability amount, and description. In other words, if you get a tax lien filed, it's going to show up on your Experian report. In addition to that, there's going to be UCC filings. It has the same thing, date and filing number, jurisdiction, the secured party. In other words, in my case, Mitsubishi Finance, that would show up, activity, whether it's filed or not. All right. It's also going to give you a summary. It's going to show the filing period, the number of cautionary filings, total filed, released, and or continued, anything that's been amended and or assigned. So if they sold the loan or they've amended the loan, all this information is going to be under your UCC filing summary. Okay. How are we doing on time, ladies and gentlemen? I usually tend to move pretty fast. We're cooking at a good pace right now. I'm going to get you out of here a little bit early. Not too early, but a little bit early. All right. In addition, under the UCC filing summary, there's going to be cautionary UCC filings include one or more of the following collateral: accounts, accounts receivable, contracts, hereafter acquired property, leases, notes receivable, and or proceeds. Oddly enough, the Experian Business Credit Advantage Report does not include Intelliscore Plus and the Experian Finance Stability Risk Score. So the Experian Business Credit Advantage is going to talk about all this, but not the Intelliscore and the Experian Finance Stability Risk Score. So let's talk about their Intelliscore Plus. This is a very highly predictive score. It provides a detailed and accurate reflection of your business's risk. It blends commercial data and consumer data on you, the business owner, and or guarantor. Reports include information on trades, legal filings, and more. Business credit scores range from 0 to 100. 0 represents high risk, obviously, and 100 represents a low risk. All right. The score reflects the percentage of business scoring higher or lower than your business, which is under review, right? So it's going to reflect what percentage of businesses that are scoring higher and or lower than your business. All right. Many large financial institutions around the world use it, as more than half of the top 25 P&C insurers and most major telecommunications and utility firms. So in other words, all the major companies are using the Experian Intelliscore Plus. Once again, that's why I say don't ignore your Experian score. It's really, really important. Industry leaders in transportation, manufacturing, and technology are also known to use the Intelliscore Plus as their primary risk indicating model. Okay. Uh, it has more than 800 aggregates or factors affecting business credit scores. Scores are assessed on the millions of businesses in the Experian database. So the Experian Financial Stability Risk Score, the FSR, predicts the potential of your business going bankrupt or defaulting on obligations. The score identifies the highest risk businesses by making use of payment and public records, which include any severely delinquent payments of 61 plus to 91 plus days, high utilization of credit lines, tax liens, judgments, collection accounts, industry risk, short time in business, etc. So it's kind of taking all of this information and putting it together as a hodgepodge and coming out with these data points and giving you a financial stability risk score, an FSR. The FSR shows a 1 to 100 percentile score plus a 1 to 5 risk class. The risk class puts businesses into risk categories. The highest risk is in the lowest 10% of accounts. A score of 66 to 100 and a risk class of 1 means a low risk of default or bankruptcy. Okay, so you want to be above 66 all the way up to 100, and you want a risk class of 1 if possible. That means you're going to be a low risk or a low risk of default or bankruptcy. Right, but a score of 1 to 3 and a risk class of 5 means your bankruptcy has a high risk of default. So obviously it's the flip. It's the exact opposite, right? And actually, I would say that's 1 to 66, 1 to 65. So let's go to Equifax. We're almost there. We got 1/3 left. I think we can make it in an hour, baby. I think we can make it. All right. So Equifax data. This is probably the least known business credit reporting agency. Excuse the water. The company gets its data from a data sharing agreement with the Small Business Exchange, the SBA, a Net 30 type industry trade credit information from a wide variety of suppliers that provide products and services to businesses on an invoice basis. They combine financial data with industry trade credit data and add in utility and telephone data, public record information, bankruptcies, judgments, tax liens, etc. The first section, they're going to identify your company. Shows all the information about you, such as your business name, address, telephone. It will also include your Equifax ID. And Equifax ID is how Equifax can tell your business from similarly named businesses. All right. Credit risk score runs from 101 to 992. Higher numbers are obviously better. The section also shows key factors. These are positives and negatives about your business, such as how old your oldest account is, if you have any charge-offs, are you late, the size of your business, things of those natures. All right. It's going to talk about credit utilization, shown as a pie chart, similar to Experian. It graphically shows which percent of your available credit line you're using. It also has identifying labels to show how much each percentage truly is. is only for your financial accounts. In other words, it's not vendors. It's only going to be if you have a business credit card, a credit line, any type of loan, real cash access. That's what it's going to show. It's not going to show if you have net 30 with Uline and you maxed out on it. It's not going to show that, okay? It's only your financial accounts. All right, so the payment index, it runs from 0 to 100. The higher the number, the better. It also shows what the industry median is. So they're going to show your score and your industry median. 90 plus means paid as agreed. 1 to 19 means 120 or more days overdue. We don't want to see 1 to 19. We want to see 90 plus, right? There's a day beyond term section. This is a line graph showing the average days beyond terms by date reported. It is for non-financial accounts only. So first one we talked about was financial. These are for your vendor accounts. Again, I'll use Uline. If you pay Uline beyond terms, it's going to show this on the day beyond terms graph, okay? Plus it shows any recent trends. So if you've improved your payment habits, it shows up here. So if you run through a rough patch and you begin paying on time again, it's going to show that you're trending up. Things are good. All right. That's why I talked about take care of your older debt if you can. It's important if you want to continue to move forward. Every company runs into a bad time. Every company. All right. So don't be embarrassed by it. Handle your business. Get your scores back up. They're going to recommend you for a higher and higher credit once you get going there. All right. Business failure score / inquiries. This score runs from 1,000 to 1880. You're never going to remember all this, but that's okay. It shows key factors such as recent balance information. The sectional inquiry shows the date and if it was an inquiry on a financial or non-financial account. So inquiries are a factor with Experian, but again, that's a low impact. All right. There's also going to be mirror messages. This part seems to be like a free form field. The purpose is evidently to add notes to your profile. This could be notes on the number of your locations or any business aliases. It's going to give you a summary data. It shows the number of financial and non-financial accounts, the date the credit became active, number of charge-offs and total dollars past due, most severe status in 24 months, single highest credit extended, total current card exposure, your median balance, and your average open balance. All right. In addition, it's going to show recent activity, which includes the number of accounts that are delinquent, any new accounts that have been opened, inquiries, and accounts that are updated. So it runs very similar to a consumer report. It's a little more in depth. Then there's the public record section. This is going to have information on bankruptcy, judgments, whether they're satisfied or not, liens filed and opened and or released, number, dollar, most recent date filed. If there's none reported, then the date field will actually show that there's nothing there. All right. Then there's additional information. The final section appears to contain somewhat miscellaneous information, such as alternate company names and DBAs, owners and guarantors names, name, type, date reported, business and guarantor comments seems to be another free form field, and report details, the date the report was generated. All right. So this is all your credit monitoring. I know we dove into a lot of information. Don't expect you to remember it all. To me, you can get your summary reports at creditsuite.com/monitoring. If you want to get detailed reports, you go ahead. You can order those reports individually from each one. It's not a bad idea at least once a year to do that. Kind of look and see where you are. It'll give you an idea of which direction you're heading, and it'll actually make it easier for you to get where you're going. So I'm going to give you some tips for maintaining good credit after the review. First of all, simple, right? Pay your bills on time. It's the most effective and fastest way to raise your business credit scores. Maintain good business credit scores. You should also dispute any material inaccuracies on your reports. And I'm saying inaccuracies, not things that are bad. You just want to get rid of it. Again, it's not like consumer. There is no consumer protection agency for business credit reports. Okay. If it's legitimate, it's going to stay there. If it's not, then you should definitely dispute it. If you're unsure how to find out, just reach out to us at creditsuite.com. Okay. Inaccuracies are material if they're dragging your scores down. So again, any immaterial inaccuracies, in other words, they're not affecting your score, don't worry about it. But they are affecting your score, then you definitely want to take them and dispute them. Okay. So here's how you dispute. Business credit reporting issues will not change your scores without proof. They're starting to accept more online disputes, including proof of payments with it. These are documents like receipts, canceled checks, things like that. If you need to snail mail anything in, use certified mail so you can have proof that you sent in your dispute. Be very specific about the concerns with your report. So I'm going to pick on Uline because everybody knows who they are. So Uline reports me as 30 days late. I'm like, whoa, whoa, I've paid you line. Remember? And I go through my history, and let's say it's a credit card statement I can prove that I paid them with, and or a check. I dispute that with the credit reporting agencies. I send a copy of the bill. I send a copy of the check, preferably a check, show that it was paid, and have them remove it. Okay, that's a legitimate concern, right? If it's something that's illegitimate, in other words, it's something you haven't paid, and you're just trying to get rid of it, good luck. They're going to want proof. All right. So, how do you do a credit review on your own? Checking your business credit reports in depth, as we've done throughout this presentation, is the way to go to do your own credit review. And again, at least once a year you should do this. But how do you know if there's an issue you need to address, right? The answer is you got to monitor your business credit. Each of the business credit reporting agencies has their own plans. Pricing is current as of September 2021, by the way. Use D&B Credit Monitor to check your report. It costs $39 a month. All right. View recent scores and ratings and benchmark your business versus your industry. All right. It also alerts you to special events like suits, liens, and judgments. It'll notify you. It also includes dark web monitoring, which scans the dark web to help protect your business from potentially fraudulent activity. Again, this is D&B. Use the D&B Credit Monitor. It's $39 a month. All right. Experian. Again, this price is current as of September 2021. The Business Credit Advantage is $189 a year. You can monitor business credit for 1 year. We'll have alerts and changes. The Business Credit Score Pro is $1,995 a year with trade details of $1,495 a year in summary form. Only multiple businesses credit report access. Profile Plus is $49.95 just for a single report. And then your credit score report is $39.95 with a credit summary report with score. All right. Now you're going to see why our monitoring is such a big deal. All right. The Experian subscription plans. The Business Credit Advantage subscription plan, just one report including nearly everything Experian offers. This includes the BCS, the Intelliscore, the FSR, the Financial Stability Risk Rating, collections, trade payments. You get 30 reports per month. The plan does not include email alerts, monitoring, dispute resolution status alerts, 3-month score trend, unlimited access to your report, business identity monitoring. Experian also offers an enhanced version of this plan to get more information, including trade detail payments, UCC details, inquiry details. Currently, it costs $14.95, not $14, $1,495 annually. All right. Then we talk about the Profile Plus report. You get everything covered in the Business Credit Score Pro subscription plan. Plus, it's optional with the more expensive report: trade payment detail, inquiry detail, UCC detail, corporate financial information. You get then you get the credit score report, which gets everything covered. And I'm diving into a lot of stuff here. You get the credit score pro subscription plan, but not the optional sections. This one is like the one-time version of the Business Credit Score Pro subscription plan. You can use to decide if you want to subscribe to the more expensive plan. Equifax. These prices, again, current 2021, includes a credit summary, payment trends, and public records. The idea is to help you identify potential risk of late payments and business failure. You can order a single business credit report for $99.95, so $100 for a single one. Or order a business credit report multi-pack, 5 for the price of 4 for $400, basically, for $39.95. See, to me, once a year you can do all this. This is really expensive. Really, really. You can spend hundreds. You see hundreds and hundreds, $1,500 to try and keep up reports from all three of these big business reporting agencies. But what you really want to do is get a summary report, and then once a year, look at that in-depth report. All right. You can get all three of these, all three of them, all right, all in one place for a lot less. Go to creditsuite.com/monitoring, MONITORING, creditsuite.com/monitoring. I think we give you 30 days free. It's obviously this comes through NAV, and actually you get it through our business finance suite as well. See what the credit issuers and lenders see, so you can directly improve your scores and get the business credit and funding you need. Okay. Again, that's creditsuite.com/monitoring. I believe the first month is free, and then it's $24 a month after that. Cancel anytime, but that's significantly less than $1,495 for one, right? $40 for another, $100 for another. It's ridiculous, right? You can monitor the entire year for what? 240 plus 48, $288 for the entire year. Get all three of them. Now, again, these are summary reports, which is really what most people need. The detailed ones was something that I would use to pull my client's business credit report. I wanted really more detailed information. All right. But if you're just monitoring to make sure nothing negative is happening, the creditsuite.com/monitoring is perfect for you. All right. So how did we do today, time-wise? We did pretty good, just under an hour. All right. So to recap, business credit reporting agencies, Dun Bradstreet, Experian, and Equifax all provide detailed reports on businesses just like yours. They tend to tap similar information and draw somewhat similar conclusions. Paying on time will help your scores more than anything else. Anything else. You need to monitor your reports to help you find errors quickly before they can do a whole lot of damage. All right. Monitor with Credit Suite for significantly less than it would cost if you monitor your reports and scores at each business credit reporting agency. If you want more information, please see the presentation description below. I had a great time. My voice is starting to go. I don't know how Ty does this every day, but I really love being here with you today. I hope we answered a whole bunch of questions. I know I speak really fast. Go back, rewatch it again. Give us a little bit of love down below. Tell Ty, hey, Steve's all right. He's not bad at this. Say hello to my crack social media team here in the chat box. I know people are asking a lot of questions. Hopefully they're answering for you. Next time, oh, look, I closed that out. Didn't mean to do that. Let's do, my apologies. Next time, we are going to talk about tomorrow, as a matter of fact, why a credit plan is so important. Find out why and how to create a smart plan to exceed your business credit next year and building business credit next year. Learn how to cut your time spent and how to assure you're most likely to get approvals than denials. I had a blast. It was so much fun hanging with you guys. My name's Steve Weibel. I'm the key account manager here at Credit Suite. And today was about how small business can benefit from a 2021 business credit review. Access your free training. Go to info@creditsuite.com. Go to creditsuite.com or just simply reach out to us, 877-600-2487. My guys and girls would love to talk to you today. Again, 877-600-2487. Hope you have a wonderful day. We'll see you tomorrow.